Right, well, launched in the peak of the boom, the OTCQX International is a US equity market with more than $1 trillion in combined market capitalisation. It allows foreign companies to gain exposure to US investors without having to comply with certain legislation, US accounting principles or SEC registration. The trade on the market, or to trade on the market, companies do need to be listed though in their home market, complying with its regulatory functions. It's something Australian companies could be considering as they look to fund future growth. Fortescue Metals, just one Australian company that's already listed. Stephen Nash from Dolman Rose listed the 400th company on the OTCQX International in early November, and he expects the market to achieve its 500th listing in the next 6 months or so. He joins us live in the studio. Stephen, thanks so much and welcome to Australia.
Thank you.
First of all, just give us some background. You're a resource-focused investment bank and obviously involved in listing companies on this exchange.
That's correct. So the background for the market itself that was launched in March of 2007 is really the onerous legislation that was put in place with Sarbanes-Oxley and the reporting requirements to continue to have a listing or have a listing in the U.S. So OTCQX was created to allow for issuers that are publicly listed outside of the country to have a cross or secondary listing in the United States without incurring the extensive costs and compliance burdens of that are put on most U.S. publicly traded companies listed on traditional exchanges.
Okay, obviously that brings with it a few risks, though.
Yes.
As you said, they're not exposed to the same regulations as something that's listed in the United States, but you do have to fit in with certain criteria. I mean, how risky is it compared to investing, say, on the ASX?
Well, it really relies on the disclosure that companies are already making on their home market. So there are only a certain number of qualified exchanges that a company must be listed on prior to then listing again on the OTC or listing as a cross-listing on OTCQX. If you look at the argument can be made that these companies, even though they're not complying with SEC registration requirements, are no less regulated than those U.S. companies that do because they are complying with their home country requirements. And if you look at, say, Fidelity, one of the things that they've said as they go to increase their exposure overseas to 30% of their total portfolio, they are getting more comfortable with foreign country or Australian and other foreign jurisdictional requirements for disclosure as being the key source of information and disclosure that they receive to invest and get information in those issuers. And
they don't allow some kind of obscure companies from some kind of obscure I guess, markets? I mean, do they have to be the mainstays like the Australian market or whatnot? They obviously filter out the unknowns?
Yes, they do. So really only the top 50 or so markets around the world would be and would have companies trading on it that are eligible. And then there's one other barrier of protection or one other level of protection, and that is in order to get onto the market, you must be sponsored by what's called a Principal American Liaison or a U.S. investment bank, whose job it is to make sure that, A, you fit the bill to be compliant, that your operations are in good standing in their home country, that you are doing everything legally, and that you don't trip up when you are in the United States on this market.
Okay, so lower costs and less red tape for the companies. What's in it for the investors?
The investors get the ability to buy stock during U.S. market hours in foreign companies that they otherwise would need to wait until the next trading day, likely for execution. So the other thing is they get the ability to use U.S. dollars rather than foreign currency. So that actually lowers the net cost to an investor purchasing securities in the U.S. because many times while Scottrade or E-Trade, an electronic broker, may allow access to the Australian securities market for a $7 or $10 trade, what they're not showing is that they're going to charge you 350 basis points to buy Australian dollars.
Right.
So that adds some substantial costs. Stocks that trade on OTCQX trade in U.S. dollars, so you don't have that additional cost.
Are most of the investors American?
Yes, I would say the predominant majority are American.
Okay, so you work in the resource space. It's an underweight sector globally at the moment.
Yes.
What's the kind of interest from, example, American investors in our Australian resource plays at the moment when you take a look at this market?
Well, this is a challenging market there, and if you look at the long-term prospects for Australia in terms of the resources market, that is largely unchanged. You have some short-term factors that we hope are short-term: a strong Australian dollar, new taxes that have been implemented by the Australian government on the resources sector that have resulted, and also exogenous factors like China that have been lowering their production or their manufacturing and decreasing demand for resources from Australia. Now that recently has changed, and as we look at the prospects for Australia and companies that may merit institutional investment, it's really the longer term picture that and the longer term investors that would be focused right now on the market. Now that said, you look at resources such as gold, where you have China with only 2% of their world reserves held in gold. As yuan becomes much more of a global currency, you would expect their reserves to grow. So there are certain parts of the resources sector that present a significant opportunity potentially right now.
Okay, just I guess a fairly general question, but you're from New York. The sentiment over there at the moment surrounding the fiscal cliff, I mean, we talk about it daily here on the Business Channel.
Yes.
Are companies pretty hesitant at the moment to list or to raise cash or to grow at the moment? I mean, what's things like over there, and what's the perception on Wall Street?
I think that the perception is that people are taking a very more conservative approach. It's we want to see a deal done. There's kind of a split mind share in the U.S. on whether something will get done before the end of the year. The Republicans tend to think something won't. The Democrats tend to think something will. I think that regardless of whether something happens this year, there will be a consensus decision early next year that will really solidify the ground for companies to continue investing. But right now, without knowing the framework, uncertainty means stay on the sidelines.
Okay, Stephen Nash, thanks so much for joining us. We really do appreciate your time, and have a safe trip home.
Thank you.
Okay, we do have to take a quick break. When we come back, we'll check in with our guest host, David Land from CMC Market Stockbroking. Stick with us.